Hey everybody, welcome to TakeStock Live. Great to have you here on this Thursday, January 14th. TakeStock Live is brought to you by stockability.com. I'm your host, Sam Evans. Great to have you here. It's just gone noon Eastern time and we are broadcasting live on Facebook. How's your week been? I hope it's been good. I'm still fairly cold throughout this week as well as I'm going through. The winter has come quickly, but you know, the markets are still plenty of entertainment there for us to divert our attention from the cold and all the craziness that's going on in the world so far. And I think craziness is really kind of the theme of the day. I mean, just already halfway through January, 2021 is here, hard, fast and strong. If I've not already wished you Happy New Year or Happy New Year to you guys. It's great to have you on here. You are watching this live, so if you've got questions throughout this particular show, go on the Facebook Live, type in the questions. I can see the live viewers on there right now. I am looking and monitoring the questions as they happen in real time. Everything on this show is real time, guys, so we make any bloopers or we make a few gaffes, you know it's real. It's because none of this is recorded. But if you weren't fortunate enough to actually look at the show live, this show will be broadcast or available, would I say, for on demand on here on our Facebook Live page, on the Stockability Facebook Live page. You can also find this show and a compilation of all of our previous shows on the Stockability YouTube channel as well. This week, we're going to be talking about top fives, a new feature coming into the show regularly right now. We're going to be talking about top 5 performance enhancers for your trading and investing. I'm really excited about this subject. We are going to be joined by Master Lead Instructor at Stockability, Mr. Ryan Watkins, shortly as well, who's actually going to go through this with me. And we're going to keep this conversational, but I think what a great time to be doing like top 5s and bullet points as we're trying to enhance our performance. Let's face it, this is a great time of the year to set new goals and reset and everything that we do. And I think this is a perfect topic for it as well. When Ryan and I were talking about in the show, I was like, you know what, that's going to be awesome. Let's run with it. Let's have some fun with it as well. We are using some new technology for our broadcast as well, so again, things can go wrong, bear with us, but if it all goes derails, we can get straight back on the rails. This is the way it works. It's all good in that respect as well. Before we go any further, let's go see and take a look at where the markets are right now. I always love to do this, always love to check out the charts on here, so let's go take a look and see where we're at right now on the live charts. S&P 500, firstly, let's start it. Currently trading at 380 and 40 cents up here. Not much of a day up here, about 59 58 cents on the day. Apple just down 90 cents on the day here as well. Major indexes, QQQs, still basically just about 4 cents up for the day. And last trade test taking place at 316.08 right now as we're looking at this. What else have we got? The Russell 2000, okay, on here as well. Still powering on strong as well. This is the market. I've been looking at the Russell and the way that thing has been performing on here. 21.56 up 45 and 0.26 today. Some of the FANGs suffering a little bit. Google down ever so slightly at $13.57 down. Netflix down 6.46 on the day as well. And also on here, Amazon down $23. But again, nothing to get really too concerned about. The big thing here is really most of the index is holding steady. Dow up $1.29 right now. Like I said, S&P is still holding strong. QQQ's flat for the day, but a Russell up $4.03 on IWM, the ETF on there. Looking at your commodities as well, gold pretty much, I would say, holding steady around 20 cents at 173 on the GLD contract right now. Gold futures at 18.46, so 8.50 down on the day as well. Not really too much to write about. Bonds, treasuries holding pretty much flat for the day as well. Crude oil is beginning to march its way back up, knocking on the door of $55. If you're a regular viewer of the show, you know we've been looking at that a heck of a lot, and that is definitely one of the markets that I think I want to be talking about a little bit later on today as well. One of my favorite markets to be looking at too. In the news as well, always like to check the news, and if you're a regular viewer of the show, you know I always like to talk about the things that are really driving. Again, I would say, what are the topics right now? Inauguration. Okay, January 20th, the big day, less than a week to go. Trump still says he's going to be boycotting that. I think many of us are waiting on the sidelines. The investors are looking on the sidelines, wondering to themselves, what's the policies going to happen? Is Biden going to do what he's going to say? Are we going to just get through this inauguration? And the market is usually the barometer of that when it all comes into this. So again, not too surprised to see these kind of choppy market conditions that we've got pretty much used to the back end of last year and coming into this year as well. Any other major news as well? 10 Republicans have voted for a Trump impeachment, the second impeachment for Trump as well. A lot of people talking about the repercussions of after this presidency ends. What does that mean for Trump and his family as well? I don't know. I'm kind of glad to be removed from all of that right now as well. Johnson & Johnson also hit the news right now as well. One-shot coronavirus vaccine is what they're claiming they have, with great results as well. As you probably know, with Pfizer and a lot of Moderna and some of these other vaccine producers, there are follow-up shots. It seems that Johnson & Johnson has the one-shot solution to this as well. Will it be enough to combat mutant strains that I keep hearing about right now as well? Great news for people. Good friend of mine is actually in that trial program right now. Again, because we all had enough. Let's face it. We've all had enough of this. Wouldn't it be great if we can just get one and done? That would be wonderful on this as well. In the meantime as well, Petco and Poshmark are were set to debut as IPOs on the Nasdaq today as well. Petco priced its IPO at $18 per share. Poshmark priced its IPO at $42 per share. Pretty similar, actually, to Facebook when they first launched back in 2012 as well. So a couple of IPOs just to get us a little bit excited on the day as well. Again, it's impeachment, it's new presidencies, it's coronavirus. I hate to say it, it's more just really the same over and over and over at the end of the day. So, how are we handling these markets? We're taking them with a pinch of salt. If I just pull up the charts right now, let's go and take a quick look at one of the charts and see on here, just on the day's action. And again, I'm just going to bring us up and actually going to go and take a look at one of, I think, what I always call, the major market barometer here. And what I want to do is I want to just pull up your S&P 500. Let's just go over to that, share my picture in picture right now, take a look at your S&P 500 and see what we can see. Again, it has been, to say the least, I would regard a pretty lackluster opening to the year right now. Here's where we are right now. We had a decent push in the first part of the month. With that decent little push that the market had straight off the bat. And then now, look, we're on day 1, 2, 3, 4, 5, kind of 6 days of meh, as I like to call it. That is a technical term when I'm looking at this right now. And again, while we have the Russell that has been powering on and so on, it's always a good tell to look at what the S&P is doing. It is the daddy of all of the indexes here. For me, it is the major barometer when it comes to it as well. So again, anyone saying to me, I've been having people message me and show, Sam, how are you playing the S&P? I'm treating that thing like a range until it gets me otherwise. Typical price action that I'm seeing here with regards to the lack of, I would say, clarity on economic policy that we're seeing not only here in the US, but around the world as well. As you can probably tell, I am a Londoner. We're just as confused in London as we are here and all over the world as well. Everybody's waiting. What is going to happen with this virus? What's going to happen with the vaccines? And heck, are we even going to get the new president in and sworn in safely? I hope so. Violence does not solve anything. In the meantime, though, let's just take a look at this. It has been the performer. Look at the Russell. I love it. I have to talk to Ryan about this when he gets on the show. But the Russell 2000, what can stop it? Got a lot of the traders absolutely kind of just like, what the heck is going on? When you start to look at the trend that this thing has had since around early November and to where we are now, unbelievable is all I can say. Another strong day, new highs put in. Let's just zoom in and see that, shall we, on the market? Look at that, $214.39 is the brand new high that we've had on there as well. This market just seems that once it got to 2,000 on the futures, it hasn't stopped at the moment as well. And what I'm seeing on here is pockets of new buyers coming in. I'm going to have to get Ryan's opinion on this, but as I say right now, and what I'm seeing on this market here, just around here, we've got a new load of buyers. I think $210 is the new magic number, the holding point. If I was going to be even more conservative, maybe down to a 205, but this whole $5-10 mark between 200 and 210 for me is the new benchmark at the moment on the Russell. And anyone who's ever worked with me over the years, I don't get too excited over bull markets. I've seen them come, I've seen them go, but they are prevalent. And this one still is prevalent, what we're seeing here on this. And until we see any real technical damage, until we see this thing really trading below $200 on the IWM, or should I say 2,000 points on the index or the futures, I think the Russell's holding strong. Would I want to put my life savings into it? Heck no, I would not want to put my life savings into it. That is the thing. That's always the question. Would you want to put your life savings into these kind of markets? Well, you know what? I'd love to get the opinion of my guest today, Mr. Ryan Watkins. Ryan, can you hear me okay? Would you be putting your life savings into the Russell right now, my friend?
I wouldn't invest my life savings in any of those things right now. Not the full amount. No, the Russell's actually a bit too extended for me right now. I'm more of a buy the pullback kind of trader. And so I absolutely agree. It's incredibly bullish right now, incredibly strong. The momentum is very, very bullish on that. I just would want to wait to buy a pullback on that. And even I'm a breakout trader as well, but not this high. It's not my thing.
And the breakout style that you're talking about, that's where, as a market makes new highs, you're prepared to buy it, right? But again, the first principle is also, having a clear signal in that, right?
Right. There's got to be a very specific setup for that. And right now, it's just incredibly extended. And I don't buy after price has been extended using any strategy. So the breakouts I'm talking about is more after it has been consolidating for a short period of time.
Right.
And expecting or anticipating the breakout to happen either that way or after it's pulled back and it's gone sideways for a little while. So I'm getting a good deal. It's already in a strong bullish market, but it's pulled back and then it starts consolidating and then buy the breakout after that consolidation with a lot of upside potential on that. So those are really the two breakouts that I would do, but Russell doesn't meet that qualification right now.
I love the thorough analysis that you have on there. You said about a period of consolidation and waiting for it to go higher. I'm going to go and share the charts with you right now, and I hope you can see this as well. I got you in the top right corner. Looking at our charts right now, Ryan, is that what we're seeing on the S&P 500? If we look at our chart on the far right here, I'm going to go and maximize this out. I want to go and look at, I think right now with the year having how it started and so on, a really good way to look at this would be to say, hey, let's check out these markets. As they've started out this year. Here we've got the spiders, the SPY. Is that what we're seeing right now, Ryan? Would you see if I zoom in this for the viewers right now? Is that what we're seeing, that coiling right now? Is this a kind of pattern that you like?
No, I want to see a little bit more, compactness. It's close. It really is quite close. Just giving an example, price just recently, a few days ago, pulled back. So that was the pullback. I got in some long positions then, so I'm already in. And now as we're coming up and challenging those highs again, we want to see it kind of consolidate just a little bit more, not too much long, but yeah, something like that basically, and then give a nice pop to the upside. And, the classical term on that's called an ascending triangle would be one method of that. Another thing is just basically that the price is going in a small sideways consolidation. I call them a box pattern. Got that from a real famous trader, Mr. Darvis. The Darvis box is called.
The Darvis box. Okay, cool.
Incredibly well. So it's a really wonderful pattern for a breakout.
Love it. Excellent. So again, I think we were talking a little bit about this on the show, and I was having one of my guests last week. But I feel that, again, I don't like overly extended markets. They reek of emotion and excitement, Ryan. So for me, call me conservative. Maybe age will do that to you. I'm still believing this trend. Do I believe in it from a fundamental perspective? Heck no, I don't. But who am I to impose my will upon the market, right? That's not what this is about. It's about trusting the price. To me, I look at the SPY and I just see it as a more steady trend. Going back to that Russell that we were literally just talking about, there is nothing steady about that. It is just takeoff, it's just rampant, and it needs a pullback. So again, I think I would see a similar pattern on the DIA. And I'm not a big guy on the Dow Jones as much as I was, but you think the Dow Jones, you seem to see a lot of similarities with the way that operates, and also your S&P 500. Are we seeing a little bit of that consolidation again? How do you like the Dow? Is what I guess I'm getting at here, Ryan.
You see it a little bit there. Take today out of the equation because it's above that now, but yeah, there you go. If you look over those last several days, we can definitely see some consolidation there, and we see it just, bumps up against those high multiple times. The lows get a little bit higher each time, which tells you the strength is there. Every time price dips down, the buyers are right there to, buy more of it. Whoever those buyers are.
Whoever they are, right? That's a great point you make.
Professionals or rookies, amateurs, you name it. Whoever they are. But that's really one of the patterns that I really like to see, just to confirm that, yes, this market is still bullish.
Yeah.
And if you switch over, go to the NASDAQ, I'll show you a little bit different picture to it. So that's that consolidation right near the highs there. And then the NASDAQ, which is zoom in on that, there you go. Look, just a couple days ago, really, when price pulled back, see that big bottoming tail?
Oh, right. You do it right around there, yeah.
That's it right there. That's where I got in and just loaded up a bunch of, on the QQQ as well as the NASDAQ stocks. I did options on those, not just the stock itself. But that would be an example of a pullback
Okay.
or in and uptrend. So,
and there have been some real nice opportunities since we took out this previous plateau. And again, I think I always talk about these big round numbers, 300, this area here, cutting right back on here has been a key level. Since that thing has held, we have managed to spring, and there have been those pullbacks that you're talking about. And I've always said this to somebody: if a trend is really going to continue, it needs to take a breather, right? It needs to recharge, it needs to rest. When you just start seeing things go like this, it's like, you know what, you're chasing a moving train, and you're going to rip your arm off trying to jump on that, you know, Ryan. How important is something like that to you in your analysis?
Very. I've been there, done that, you know, where I've tried to catch that speeding train.
Yeah.
And it does rip a few arms off from time to time. So it's like, okay, that's not working for me. So I really look at it simply like this. In an uptrend, I'm either going to be buying a pullback,
yep,
or I'm going to be buying a breakout. That's it, done.
Right.
And I just keep it that simple.
Yeah.
Now, there's more detail behind that, of course. Like, well, okay, what does the pullback need to look like? What are the criteria of it? What's the breakout pattern need to look like? What's the criteria of that? So there's more obviously involved. But to simplify this, that's really just how I'm getting into these uptrends that we've seen.
Having just drawn those lines on the chart, I do like, let me just clean that up for the viewers on here as well. But, you know, just going back over and taking a look, I really do like, you know, the sustainability, you know, of that on the Qs. For me, you know, I've been shying away from it, but I think it needed this previous pullback here. It needed this as well. And right now it looks steady. And again, it's like one of those things. It's almost so obvious that you have to do it, but then you have to manage your downside on that. And for me, you know, the gains are there, but they're slow and steady. And again, it's a difficult thing for somebody who's brand new to this. But when you've been in this business a long while and you see this, you know, it's almost like patience does pay. And, you know, waiting for those pullbacks, you know, and a better buying opportunities there. I guess it's a balance of just asking yourself, hey, you know, you know, where's the best place to get in? I mean, I look at areas down here, and of course I'd love to buy it down here, but it may never get there. And by the time it does get down there, we're in a bear market, right? So again, you have to be proactive and pick your spots, you know. Do you find it sometimes harder to get the reward when the market just keeps grinding higher and higher, or do you just use other asset classes to tweak that rate of return, Ryan?
I do use other asset classes because, for example, if all I ever did was trade the Russell, as you can see, the only place to do that, to make money on that, is to buy well before, you know, long ago.
Yeah.
You're writing it up right now because you're getting very few opportunities as a pullback trader to get into that. As a breakout trader, you know, sure, there's opportunities there, but...
Wow, I mean, just look at that. I mean, just look at that thing on the weekly chart. I've got the weekly chart of the Russell on here right now, and it gives me a little bit of a chill, you know. I worry just about what could happen. That's the thing. I worry about what could happen, but
it's going to come down at some point. But
nothing goes up in a... No one knows when, but we all do know this. Nothing goes in a straight line forever, right? So I guess, you know, it's back to that, you know, that balance of just doing this the right way and, you know, obviously being smart about it. Ryan, before we get into the top 5 performance enhancers, and can I say I am super excited about that. I'm really, really excited about it. And I want to keep this real conversational. The viewers always say they love looking at the charts. And a big shout out to Dana, Graham Spruce, Larry Gale on here, Phil Natflin. Great to have you and other people looking at the show right now. We've never really talked about crypto when I've had you on the show before as well. I'm going to bring it up on here. I want to go look at, let's go take a look at, I got my watch list up on here, which is the best one. Let me see on here. This is the one on here, I think, is the BLX is the one for me. Here we go again, is all I can say. It was in the news yesterday. It was in there, and you know, we were you know, everyone was like screaming about 40,000 points and how this thing's doing. Just look at those charts right now. I'll move this just down again so a lot of you guys can see it on the far right, and I want to really kind of forget even the look. What do the monthly charts give us? A straight line. What does this give us? A straight line. I think, you know, let's go at least take a look. And let's take a bit on the daily chart. I mean, what a run this has had. We had a slight sell-off. You know, we've come back and bounced again. Ryan, what's your feeling on Bitcoin? On crypto in general?
You know, I don't trade crypto. I'm probably one of the a few traders out there, I guess, that hasn't joined on that that bandwagon or whatever you call it yet.
Right.
I just stick with what I know and what I do, and I just do what I do. And I'm simple like that, and it's been working good for me. I think there's definitely opportunities in crypto, and, you know, I'm not going to say I'll never trade it because the reality is there certainly certainly may trade it at some point, someday. But right now, I guess I'm an old dog that just likes to keep doing the same trick over and over again.
It's challenging sometimes, isn't it? And again, I think, we can look at this and talk about it a little bit. It's challenging, I feel, sometimes when you've had consistency in doing something, right? I mean, and I relate trading and investing to everything in life, okay? I remember with exercise, I'm big into my exercise, as you know. I love my training and everything. And for years, I was powerlifting and deadlifting and getting the results that I wanted out of it. Okay. And then suddenly I started putting my back out a little bit because I was probably going a little bit heavy and I was getting egotistical and my workouts are getting longer. And I was like, okay, maybe now I need to change because I'm not getting the results. Okay. That I wanted anymore. I train completely differently now and I get and I get the results. I've just had to change my approach. I guess what I'm saying is I've always worked on a philosophy of I'll keep doing it until it stops working for me. And that's what I've done with exercise. I'll keep training the way I train now until it stops working for me. Is that a good habit to get into as a trader and investor as well? Is when you're into a good thing, use it. And until you have a problem where it's not working, then it's time to start maybe mixing it up. How important is that in your own personal approach, Ryan?
Yeah, I think that works because it's worked for me, and I don't trade just one thing. I trade, options, I trade equities, I trade futures, and so I think I'm very well-rounded in that. And just to give you and your viewers an example, let's see, so about a day or two ago, I loaded up on some equity positions, or options, I should say, long bullish options positions. But on that particular day, that's when those markets were meeting the criteria. Now, go back even a few days more, and there weren't any really good, solid equity or option positions for me to open.
Right.
So then I switch over to the futures market. I'm like, oh, hey, look, a great opportunity on the gold futures. Bang, that's where my money goes then. Or, maybe the month before that was, okay, crude oil, that's where it's at, so let's get in on crude oil. So I'm just looking for where the opportunity is at that particular day or week or month, whatever. And so, yeah, I absolutely want to trade other vehicles, futures, equities, options on equities, and it very well may be Bitcoin, because I do believe that's a completely separate trading vehicle that really doesn't have a whole lot to do with all the other stuff. So I think that probably will eventually be the next thing I get into. I'm just not there yet, but I know there's a lot to learn about that whole industry and how it works, and I've actually started that process of learning about it. Just watched some documentaries and stuff just to inform myself more about it. But right now, I know it's just, hey, what's working for me is working for me, and I have multiple vehicles that I'm using to do that. So if one isn't working right now, I go to the one that is working, or let's say where the opportunity is at. And it's not always in the equity market. It's not always in the futures market. So I do like to be able to pick and choose where the opportunity lies at that particular day.
I really like that. I like that. And I think it's also about sometimes, stepping back. It can be frustrating, although saying that, not as frustrating as a gentleman I was reading about a couple of days ago who has $260 million worth of Bitcoin in a digital wallet and he's forgotten the password. And the way the encryption is done on it, he gets 10 logins, he's used up 8, he's got 2 left to go and that thing's locked for life. How bad would that make you feel? Okay? A pioneer, Ryan, literally taking payment 10 years ago in Bitcoin, but now forgot the password on this as well. So there's always somebody worse off, right? I guess is the moral of this.
That's pretty bad.
I mean, there's always somebody worse off. I think the thing is that I think I've been looking at it too, and I think you mentioned education, and no matter how long you're doing something for, I feel you can always do better, you can always expand upon it. There are always other ways of doing things. For me, I just would say to anybody, and I've been talking crypto a lot more on the show, and I embrace it now. I'm like, at the end of the day, it's here to stay. Whether or not it becomes, like the rest of the currencies, or whether it goes on to be 100,000 plus. I think we have to accept that it is an asset, it is a medium. My advice to the viewers of the show has been saying, well, find alternative ways to do it. Right now, what are you really going to get going and buying Bitcoin for $42,000, right? It's the equivalent of paying $42,000 for a share of a company, right? I mean, that's what it basically is. And sure, you can go on to Webull, Robinhood, and all these other guys and buy incremental shares right now. But guess what? You buy incremental shares, you're going to get incremental profits as well. So I think it's all about finding alternatives. And one I wanted to share with you, and I just, and again, I've mentioned this a couple of times, and I have no affiliation with this or of whatsoever on here, but this is actually a market, and there's not enough data for me to even show it. It only launched last month, but this is an ETF, BITW, which is the Bitwise 10 Crypto Index ETF, and I pulled this up, and I'm looking at it, and it's an index, okay, and you've got Ethereum, and you've got Bitcoin, and you've got all the other ones in there, just like a dollar index, just like your Dow 30, but for crypto. And I looked at that and I'm like, well, that thing like literally launched, hit highs of nearly $200 a share, which you can see just to the left of my screen right here, $200 a share on here, right? That this thing launched up to. And then obviously we've had a steady sell-off right now. I like it. I look at this, $66 a share on the ETF and stuff, a little cash position. You're not over leveraged. I was like, maybe that's a nice sort of way to dip my toe in the water. And what I like about it, Ryan, this is what I really like about it as well, is I was looking at this chart and I was like, it's starting to establish itself, with some good support zones as well. And there's some participants coming into it. So for me, there's a nice derivative of an underlying way for me to get in at a decent price, still maybe join that party, and who knows where it could go. I mean, look, this ETF could be a $2,000 ETF, a $5,000 ETF. Who knows? It could be another Amazon. I like it when things are cheap, Ryan. What about yourself?
I was just thinking while you're describing that, I said, what a great place to put a portion of your assets, because if you look at the U.S. dollar, we're on a fiat currency, and I mean, it's just been going down, down, down.
Exactly.
And it will continue to lose its value in there over time. And I mean, it's just a no-brainer. It's a given. It will continue to lose value. That's just how fiat currencies work. Every fiat currency. So
the more you print, the less the value, right?
Your money in it. So you got gold, you got silver, precious metals, you got art collections, and those types of things.
Yep.
But Bitcoin is quickly becoming that next thing to counterbalance the devaluation of these fiat currencies. So I look at if we were to fast forward, if we were able to jump forward 50 years in the future now, where would the U.S. dollar be versus where would Bitcoin be, or a lot of those other cryptocurrencies? And I really would believe that Bitcoin, and I'm not just Bitcoin, but all these other cryptocurrencies, at least the ones that are going to be able to be sustainable, will be significantly better off than the U.S. dollar. And so I absolutely believe if someone out there is, investing for the long run or something like that, then they absolutely should consider that. And that's why I've been doing my research and learning more about this, because I know I need to, at least at some point here, somewhat soon, put a portion of my portfolio in that just to counterbalance a lot of the U.S. dollar decline. And I've already done things to counterbalance the U.S. dollar decline to counteract the devaluation of the U.S. dollar, because all the assets I have and the money that I manage are primarily in U.S. based type of assets, whether it's real estate or stocks, bonds, whatever. And so there's got to be something to counteract that. And I do believe these cryptocurrencies are going to be a great way to do that.
Again, you look at it like a hedge almost, right? You can't just stay, you live in the country, you're effectively long on that currency, right? But this is a hedge. And to me, whether it's a couple of $100, $500, whatever you can afford, $1,000, who knows? It's all about diversification. And to me, I really found that, and I'm sure there'll be other products, but I liked it. I looked at it. And, I always say you've got to invest with money. There's a difference between trading and having very specific risk management principles, right? Where, hey, you know what? I have to, if I get into this, I have to be very careful and I'm leveraged. But I find with investments, you kind of got to invest with money you're prepared to lose, or at least lose a portion of. It's a different mindset, and you can go about it being proactive and safe. And I just look at this and I'm like, you know what? What harm is it going to do at the end of the day? I'll go for a dinner, a nice dinner, and it could cost me a decent bit of money. Well, that adds up over the years. Who knows what this could be? To me, it just seems like a good natural hedge. Give it a try. I like the diversification. I like the fact it's an index. Let's see what happens. You mentioned the dollar, and I don't know if I've ever pulled the chart up here on here, the dollar index on here, but let me just see if I can get the chart of it up. I'm not sure if I can get the chart of the US dollar index up on here. I've never actually pulled it up, so to see. But I mean, it doesn't really matter too much at the end of the day. I mean, I could just look really quickly here at the euro versus the US dollar. I mean, that's just the simplest way of doing it. That really, to me, that's your chart. You know, I've got a picture of the euro versus the US dollar right now. And if you're looking at this at home, you know, we look at everything here on TakeStock Live. That upward trend, literally since April of this year, that is a rise in the euro and a steady decline of the US dollar, you know. And the euro, for the last 10 years, this market's been struggling. The dollar's been up, the dollar's been down. And I'd still to this day think that it's the best of a bad bunch, right? But I think overall it's a representation of, like you say, fiat currency. You know, the problem is we keep printing, we keep printing, we keep printing. When you increase the supply chain, inevitably prices, when they're high, when supply hits the market, it pushes markets down. To me, crypto, if you can afford to do it, what's the worst that can happen? Just wait for a good price, right? That's really the key in this. Wait for the best possible price. Ryan, let's go talk about, we put something together. I know you put something together real nice for us on here on the show today that I would love to be talking about and getting into as well. Top 5 performance enhancers for your trading and investing. And we were chatting about this before, you know, getting on the live on the show today. And I was super excited about doing this and we got a real kick out of it. So, you know, we've got probably about 20-25 minutes left on our show today. I'd love to dive in that with you as well. And then you sent these over to me and you were like, hey, you know, what do you think? And I know you've sent some other emails over to me as well that I've got ready for when to show when you're there. But let's just go over to this top 5 and talk a little bit about this and what we've got. We put together a list of the top 5. And again, Ryan, I'm going to let you take the credit. You can probably see these on the screen. Everybody at home on here, just on my screen, just on my right hand side on here. We're going to put these up right now, and we put together this nice little little list of these performance enhancers on here. And the very first one, I'm going to just refresh it, so I don't want to jump ahead too much on it. First one we had on here was take risk management seriously. This was your top of the pile, the very first one. And I didn't put these in an order of importance and such. You see, number 2 is respect emotional discipline. But let's look at the first one here. Taking risk management seriously. How important is risk management to what you do, Ryan?
It's really critical, and it should be used at first. If anyone wants to be a trader or an investor and you really want to do this seriously, then you need to take this seriously. This is, look, most people, when they get into trading, they're thinking about the money that they can make. That's the greed side of it, right? They want to make $1,000 in 4 seconds type of mentality, or they want to pay their bills, they want supplemental income, they want a full paycheck, or whatever their goals happen to be, but it's usually some kind of income related type of stuff. And that's almost always everyone's focus. The best of the best traders, the best of the best professional investors, they don't look at that first. They look at the risk management first. They say, I need to know how to protect what I have. Because you can make, and I've done this in my own trading too, you can make a ton of money in a short period of time with trading. But it won't matter if you don't know how to keep that money. It just won't matter. So every trader has to learn how to keep the money that they've made. There's a saying, defense wins championships. And I used to play football and coach it long ago, and the saying was offense sells tickets, defense wins championships.
Yeah.
And it's the same way in trading, is that we've got to be able to protect what we've made, and we've got to be able to protect what's in there right now. And there's many, many different ways of doing that. Stop losses, position sizing are really the 2 big key defenders there on that. And if someone doesn't know when and where or how to execute a stop loss, they better go start learning how to do that right away. If they don't know how to position size correctly, they better start knowing how to do that right away. Like that is your top 2 priorities right after this, the show is done. Because if you don't know how to do that, it's only a matter of time before you wipe out your account. And I've seen this many, many, many times. Been in this business for almost 30 years now, and I've seen, I don't even know how many people at this point, they just open up an account and they start trading, and they just wipe out their account because they just simply don't know what they're doing when it comes to any of that risk management stuff.
It really is scary. I've been with you. Between us, we've probably taught, we've taught tens of thousands of individuals, and everybody comes at this because they want to make money. I was having this conversation with someone just the other day. I'm like, you tell me you want to make money, but what I want to hear is, why do you need to make money? What's at stake here? And you start having some real goals. And then it's like, hey, I'm working towards my kid's college education. Well, then are you recklessly going to throw away this capital that could help you finance that? Because when it's gone, it's gone. You have to pay to play. And, you know, it's this thing of people just don't understand. And what always scares me, Ryan, is these people who make money but don't have a clue of how they did it. I used to see it over and over again. What do I need help for? You know, I've troubled my account in the last couple of months. How did you do that? Did you know that that was a realistic possibility? No, they don't understand because, and here's the thing, and that's a question. When I look and I ask that question, I'm like, well, what do you mean? How did I know how I did it? I'm saying, well, when I set up an investment or a trading position, I know where I'm getting in. I know where I'm going to get out if I'm wrong and exactly how much I'll lose. But I also have an idea of where those targets are, where I want to get out if I'm successful. And I already can calculate the potential return on my investment before I've even done it. That shows I'm planning out. These guys don't even know. They're like, well, I'm up 300%. Yeah, because you got lucky. You know, and luck, you know, I always say, well, the harder I work, the luckier I get. You know, it doesn't just come, you know.
The right place in the right time.
You got to have it, you know, and that's the thing. And I've seen it over and over again. And I don't say this to scare people. Maybe you're looking at the show right now because you're taking a genuine interest, you know, in the markets. And, you know, it feels to me like right now, everyone's got an interest in the market, you know, because they're bored at home and they've all got an interest in what's going on. But it really does separate, you know, the pros from the novices. And, you know, you'll look at this, some of the best traders in history have been wrong 80-90% of the time and still been incredibly profitable because they know how to take a loss. I love that. I'm so glad it was at the top of your list, Ryan. Absolutely. Let's take a look at what is the next one you've got for us on here. Well, look at this, and let me take a look at this now. Respect emotional discipline. Now you're speaking my language. I get on my soapbox and I talk about investing and trading mindset over and over and over again. If you had to put a percentage on it, my friend, how much of this is a mental game versus a chart reading game?
99.9.
That's big. That's huge. 90. Wow, that is big, my friend. That's big. Tell me more.
Well, I look at this one. We all, as traders, we have to chart. We have to chart. I mean, that's just, you know, technical analysis, research, whatever. All that type of stuff has to be done. That's just part of trading and investing. But it doesn't matter. You can have the greatest technical buy setup or technical sell setup, but it will not matter if your mind's not right and you don't know when or where to execute your trade. You don't know when and where to move your stops up. If you don't know when and where to place your targets, when and where to manage your position when you're in it. You know, there's a lot of sayings out there. FOMO is a real big thing out there, fear of missing an opportunity. So basically, traders, what will happen is they'll get in a trade much, much too soon. And because they have this fear of missing out on an opportunity, and so they get in, and price keeps dropping against their position, and they're basically losing so much money now that they're forced to get out because the pain is so great. We call that capitulation point, where they capitulate, they give up, and they say, I've lost so much money, I can't take it anymore, get me out. And then guess what happens next? Bang, that thing takes off. And if they just stayed in, you know. And so we don't want to get into early, certainly don't want to get into late, though also that's called chasing, where we're late to the party and traders start to chase a movement when it's already had a big move and they're very, very late to the party. And, you know, what happens is when you're late to the party in trading, you get stuck with a paycheck and everyone else leaves scot-free. So we want to make sure that our mind is right, that we have this emotional control over our thoughts. And our thoughts are things, as the saying goes. Our thoughts will, I guess we'll call it, manifest in our actions and what we do. So if we have these negative thoughts like FOMO, greed, fear of losing money, that's a huge one right there. Chasing and all these different things, then that will manifest in our trading. And all of a sudden we're going to have terrible trading results, terrible entries, horrible risk management, and, you know, the story goes on and on and on about all these bad habits. And I'll tell you, Sam, anyone that's traded for any length of time knows that this is a very serious issue because we're dealing with money here. And money has a real deep-rooted connection with a lot of us. You know, and sometimes, you know, we may have grown up, something happened in our childhood where we had some type of attachment to money, good or bad, you know, and now it's coming into trading where when we place a trade, I'll give you an example. If we place a trade in a stock market, let's say we buy Microsoft, how long will it take for us to get up to be $100 profit? That might take quite some time because it's Microsoft. It doesn't move very fast.
Right.
You know? But then you come in and trade the NASDAQ futures. All of a sudden, that $100 happens in the blink of an eye.
Yes.
And it could go the other way, too.
Yes.
It could be down
yes.
$100 in a blink of an eye. And a lot of people aren't used to the speed at which some of these markets really move. You know, you could be up $1,000 in a minute or two in crude oil. And that's a big adjustment for people. They're like, I've never made $1,000 so quickly. It might take them all week to make $1,000. And all of a sudden they can do it now in a matter of minutes. I mean, that's a real adjustment to people.
Mm.
And you're not going to get that every day, of course, and you may never get it. I don't know. That depends on the trader. But, I mean, these are things that you have to train yourself to be disciplined. And I'll give you another example. This is just a classic example here where traders, oftentimes when traders look at their profit and loss on their actual platform, they can see how much money they're making or losing. It triggers a thought in their head, which comes into some kind of an opinion, or it leads to fear of losing money, like, oh, I'm up $200, I don't want to lose it. Let me get out now. And they get out now for $200 a winner. Problem is, if they just want to see discipline and let the trade play out, that might have been $2,000 or $3,000 of a profit for them. But now they got out a $200 winner, which is a very small profit, comparatively speaking. And, you know, things like that, we have to combat against. We can't allow these negative emotions to affect our trading, because then we'll get negative results. It's a major, major issue. If your mindset is not right, the trading will not be right either.
It's overwhelming, and it's incredible how we're literally reverse engineered, I think, to trade. You know, we weren't built to do it. And especially today, we live in a world where everything is on demand. We want to watch a movie, we click a button. You know, gone are the days where people complain now when a new show comes on Netflix or Disney, because Disney and Netflix release it week by week because they want it all now. I remember the days when I used to put my VCR in and record it every week, and it's like, crap, I missed it this week. And then you got to find somebody else who's got a version of it, and you have to wait. We've gone, and I've said this, I think they should rename this business of trading waiting, because that is what the essence of it is about. And if you think you can, or if you think you can't, you will. Great saying. I'd live my life by that. I've always said this: have no expectations and accept everything. You know nothing. I'll leave you on this subject with this, Ryan, one of my very, very first mentors, and I'm going back now pushing 18 years ago. This is the 18th year I've been involved in the market. Not quite as long as you, but a long, long time. And, you know, it's interesting. I remember him turning around to me and I said to him, you know, what do you think about this setup? And he goes, well, here's what the chart's telling me. Here's what it makes sense to do right now, but I try not to worry about what I think. And I was like, well, surely you have to have an opinion. He says, no, you have a process. You have a system. Because the minute you think, you're bringing your emotions into it, you're bringing your opinion into it, and the only opinion that matters is the markets. He said, you know what? It doesn't matter what you think. What you know, go live in a world of I know nothing. And I've done that ever since. And, you know, it's scary sometimes, you know, when I'm out there and you've done this, you're in a live environment, you're teaching 1,000+ students, and they're all saying, where do I get in and where do I get? And sometimes it feels weird, but you follow the process and bang, it works out great. And when it doesn't, you lose a little bit. You know what? The thing is this, you'll always remember the big wins and you'll forget the tiny losses. But if you let the big one happen, then you're always going to remember it. And that's going to burden you psychologically as well. I would always recommend anybody, and people say to me, do you still read books about trading and investing? No, the only ones I read about it are market psychology. That's all I ever read myself as well. So powerful on there as well. Appreciate that. Phil Jackson saying, so true, Mr. Watkins. Love that as well. Dan Bustamante, a regular on our show, our partner in all of this as well, just saying nice, he's into that as well. Good to see you guys here live on the show. Let's get on to our next one then. Number 3, Ryan, know what you do and how you do it. I like this one. Explain. So know what you do and how you do it. So, all right, let me kick it off and hand it over to you. And I'm going to throw it here. To me, what this comes up as is having a plan. Okay. Like I remember years ago looking at a price chart and saying, right, what am I going to do right now? You know, what am I going to do? You know, how am I going to do? I mean, look, just to give you an example, I could go over to a chart right now and I could look at this chart and say, all right, well, it's uptrending right now. What am I going to do right now? I could look at it and go, well, actually, I'm in a near buying opportunity. But if this doesn't work out, I know the next place where I'd want to buy it. That's how long it takes me to make that decision, obviously. Years ago, I'd be all over the place, looking at different charts, going to different perspectives and stuff. I tried to develop very early on in my career a process of going away from trying to find a trade or an investment and getting into actually just recognizing one. That's by having a system, a set of rules, I guess it's how important is it to take yourself out of this and let the system do the work for you, Ryan?
I like that you mentioned the system, the process, and that's really what it comes down to is us traders need to have that systematic process that we do and just repeat over and over and over again. And it was interesting. This was many years ago. I was, thinking about what's my process going to be, what's my trading philosophy, and things like that. As I was writing my business plan for trading, and I reached out to different well-known individuals who had some pretty great quotes that would help me, and one really stuck to me. It was from Bruce Lee. He says, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. That's a big difference.
Yeah.
Imagine, just relate that to trading. I fear not the man who has practiced I fear not the man who has practiced 10,000 trades once, but I fear the man who has practiced one trade.
Yeah, one setup.
10,000 times.
One setup over and over and over again.
Yeah, one system. And that's really what it comes down to is know what you do and know how you do it. And you're not going to know what you do or how you do it unless you first know what that system is and you diligently practice it. It's purposeful practice, not just practice, but, focused practice, diligent practice, determined practice, all that type of stuff where you truly set out in your mind to master that process.
Yeah.
And that's really what I mean by point number 3 there is you really got to just master that process. And you can add more after that. I'm a definite fan of having more than one tool in the toolbox for traders. It's like, okay, let's get really good at one system first, that one method, and then now we can add another tool to the toolbox. For example, I started out my career in equities and got good at swing trading. That was just my thing, is swing trading equities. And then later on, that came into trading futures. And later on, it got into trading options, mainly swing trading on options. And so there was this evolution that happened, but I wasn't trying to learn everything all at once. It's hard for me to do that. I think it's probably hard for a lot of people to do it. But get good at that one or two things, one or two strategies that make sense to you, master that, and then you can add more tools to the toolbox after that. So it's really just becoming intimate with your trading system so that you know it so well and you become not just competent in it, but also confident in it. There's one last thing to mention here. There is something called unconscious competence. Like when you tie your shoe, you're not thinking about how to tie your shoe. You just do it. You just know how to do it. And that's the point where we need to get to, every trader needs to get to, is that unconscious competence where they look at a chart and they know exactly what they're going to do, how they're going to do it, and when they're going to do it in about 1 to 3 seconds from looking at that chart. That's the competence, that unconscious competence that every trader needs to get to.
I love that. I've studied the concept myself as well. And, trading without thinking, investing without thinking, it becomes a true intuition. And I think people blur the lines with what true intuition really is. Intuition is that. It's that subconscious competence. It just happens and and it's intuition. It's like, you're driving your car and a kid runs out in front of you. The minute you see that kid, you brake. You don't think about what you do. You instinctively do it. And I think that's that goal for market speculators. They have to get to the point where they know the setup that they're looking for, and they take the setup that they're looking for. Absolutely love that, Ryan. Absolutely love that. What do we got next? Okay, so let's take a look at this one. Number 4 in here, track and study your trades and investments. I guess what we're talking about here is a bit of good old-fashioned journaling, really. Yeah. Oh, man, I struggled with this one over the years, my friend. Yeah.
I hate it. I don't like it. It drives... The thing I want to do the least is write down my trades. Here's my entry. Here's my exit. Here's my stop. Here's my target. Here's this. Here's the results that happened. No thanks. It's my least favorite part of the trading process. But here's the deal. It is the most beneficial part of the trading process. And so that is what helped me overcome that I don't want to do a thing to... I gotta do it because it's gonna make me a better trader.
I don't want to do it. I gotta do it.
In the
Right.
It was literally just me writing everything out by hand, and that's something I just did not like that at all. And then it evolved into taking a picture of my charts and putting it on a PowerPoint slide deck that was helpful for me.
Okay.
Because I could just hit the print button and then I would draw it out like, here was my entry, here's my exit, here's my stop, and I'd color coordinate everything. Entries were green and stops was red and so on. And I would write on the chart everything that I did on that. I would write the pattern. I'd do a before picture, a during picture while I'm in the trade, if I'm moving stops up or something, and then an after picture. So I had the full, complete, A to Z, what happened in the trade, and I would go back and dissect that and analyze that and study that. It wasn't just journaling where I bought, where I sold. Like, that doesn't help me. What helps me is the actual study, the analysis, the detailed get in there and say, what did I do right? What did I do wrong? Anything I did wrong, what do I need to do to solve that problem? And that process was what helped me, I believe, probably the most, or one of the top three things that helped me the most in increasing my performance as a trader. Not only from a knowledge standpoint, like, okay, I get more knowledge of how to trade, but I get more skill. And that's what trading is. Trading is not a knowledge. Trading is a skill. So every single trader listening to the sound of my voice, you must work at your skill. You must develop your skill. You must increase your skill. You need the knowledge. Every trader needs that. But trading is not a knowledge. Trading is a skill.
Yeah.
So what needs to be a bigger focus here? The skill. And you won't increase your skill unless you're doing your due diligence and working at studying and analyzing your trades. So that's really what that is. And nowadays it's much easier to do. I'm not writing anything down. It's just a click and drag. And
But you've done that work.
Software, it's a software now that does all the calculations for you. And the time that I have to spend journaling and data entry and all that kind of stuff it's a fraction, maybe like 1 or 2% of what I used to have to do. And there's lots of websites out there that'll do this for you, and it is so much easier nowadays, and there's really no excuse for not doing it. It's just get in there and do it. Don't be lazy about it. Don't procrastinate.
Right.
Get in there and do it. You really get a good visual representation, some real hard data of how you're doing as a trader, and then, of course, where your strengths and weaknesses are.
Yeah, I think two things I would add to that. I mean, I feel your pain having been there and done it, and it is. But I guess it's like this, you mentioned the skill. It's like being a surgeon. You decide that you want to be a heart surgeon. You got to go through Anatomy 101. You got to learn and build your knowledge base of how the body works and the heart works and all things. And then once you take that knowledge, you develop your skill to become the best you are at what you do. I can relate to that. And then the second point I'd make on that, this is like anything, we don't just build a brand new car and then put it out. Hey, buy it. You road test it, you stress test it, you do all of those things. And if you can't be bothered to stress test and road test, your hard-earned money, then I give up. Because it's...
I sent you an email, actually, that it shows my journal. I could walk you through your viewers through that real quick here, just to give you guys an idea of what we're talking about, like journaling, studying and analyzing trades and things like that, if you want to pull that up.
Sure. So, you sent this to me.
There's one trade in particular where I made a mistake in my trading, and that's just another thing. We as traders, we want to track our mistakes so that we're aware of our mistakes and don't repeat those mistakes. Or if we do, they're very, very few that we repeat them.
Let's just take it. I appreciate you sharing this. So you had a good run here, my friend. I mean, this is a great little tool that you use for your journaling, is it, Ryan? Tell us a little bit about this.
Yeah, so I've been working with, I got about 3 different software companies I'm using for my journaling right now, and I want to narrow that down to one. And I like this one the best so far. It's really good because it helps me with a lot of things, mainly, as you can see on there, tracking my mistakes.
Yeah.
So if you look at, it's pretty obvious there. It says, confused and fat finger in red right there.
Yes.
So I want to show that one. That was actually a trade that I screwed up on, and it's just me somehow pushing the wrong button on there. I made a mistake on it. And so what I do is I label all mistakes that I make.
Yeah.
I've been doing this, 28 years now, and I still make mistakes. They're not often, but I do make them, and I want to track them because I want to eliminate my mistakes. And, I don't know if I'm going to really eliminate all mistakes. I'm sure, I do this another 30 years or so, I'm going to have still mistakes, but I want to reduce them as much as I possibly can. And in order for me to do that, I got to keep track of those mistakes and find out, okay, what am I doing wrong, and then how to fix that. So basically what that is saying is, what was that? That was iRobot, so that was a long position. And if you look right below that, I had just gotten out of iRobot. That was an option position on that. So I just exited that position, and then somehow I got back in. I'm like, oh wait, that's not what I wanted to do. I just was like, I call them fat fingering the keyboard here, and I got a little confused because I actually thought it was a different company that I was trying to get an option position on, but it wasn't. It was iRobot, and so I'm like, got to get out. So I just said, and now here's the issue, and I've had this issue before. Because when I fat fingered on the keyboard or when I accidentally got into a position, my first thought is, well, I don't know, maybe it'll make money. Let's just stay in and see what happens. Wow. That's a bad choice right there. Because the reason for getting in the trade was not according to the system. So just get out. Cut bait and get out. And that's what I did there. I just said, all right, look, let me place my exit order. Let me just get out of this. So when I got out of that, it made $50. Okay, great. But it, easily could have lost money too. But just get me out. It's not according to plan. So I got out and I labeled it. I was confused because I thought it was some other company or something, and I fat fingered it. Basically.
I love that.
And so that is how I keep track of my mistakes.
There it is. Confused fat finger. I've highlighted it right there. You still made $50 on it, which is pretty nice though, right? Yeah. And what I can say, thank you for sharing this as well. I love it. Like, you did have your losses. This is what you've been up to this month, I guess, Ryan. Is that what you're saying on here?
That's for the whole year. That's going back to 2020.
Okay.
That includes 2020 and 2021. Now, that's not showing all the trades. That's just all I could fit on the...
Oh, yeah, right. Because I was thinking, man, what a year. I can see this is just actually a short period of time, just going from December, actually, that you've got on here as well. But I love this. I mean, you can see your profit factor on here as well. Good solid P&L, average daily P&L there as well. Really impressed with you showing that as well. But again, I'd stress to everybody, this doesn't just come overnight, What I love is that accountability part of it as well. Great section of wins that we can see here as well. I guess we've also got to remember, that's not going to be like that all the time, is it? I'm sure if we scroll down there, there'll be a bit more. But really love that. And, that's the important thing that people overlook and stuff, is they don't look at the process behind it. So, I mean, a lot you can learn about that. And I've always said this, you want to know what your biggest enemy is in the market? Your biggest enemy in the market is not the market, it's yourself, right? That's the thing. I think that people often forget, just how much of an enemy, you can be to yourself if you're not doing this the right way, Ryan, as well. Love that. Journaling, road testing it, seeing all this information, so key. We've got our last one on here. Let's take a look and see what we've got on this one. Here we are. What do we got here? Treat everything like a business. You must be, you must get on well with Dan Bustamante when he's on here. This is what he preaches about all the time, Ryan, as well. Yeah, treat this like a business. I get tingles and uncomfortable feelings when people say they dabble in the market. Nothing grates me more. This is serious business, right?
I dabble in cooking.
Yeah.
I like cooking. It's a hobby of mine. I really enjoy it. My daughter, she's 4 years old. She's my little chef. She's my assistant. We have a great time. But that's what I dabble in.
Yeah.
Trading, I don't dabble. This is my business. And every trader really needs to teach. If you're going to take this on seriously, you're going to do this full-time or even part-time, which could certainly, be for a lot of people out there. If they want to just do it part-time, that's fine, but treat it seriously. Treat it like a business, where you got that business mindset where I own this business. I'm going to work every day to produce. I have revenue. Those are my profitable trades. That's revenue. My stop outs are my expenses, and really treat it like that business mindset, not as I dabble in the markets or trading is my hobby or nothing like that, because you're not taking this seriously. Remember, trading is a skill, and that skill must be developed. Nobody gets the skill overnight. That just doesn't happen. This takes time to learn, because you got to get the knowledge part of it, and then you got to develop the skill side of it as well. So there's really those two big pieces of it, and nobody gets that stuff overnight. It does take time, and with that in mind, how are you going to really excel as a trader? You got to take it seriously. Treat it like a business mindset, not as something that you do as a hobby. If you're going to do this, do it all in. Go for it, all in. Pedal to the metal, you're in. Otherwise, if you're not committed to this, find something else that you are going to be committed in. You'll probably have a lot more success, and it'll fulfill your heart desires a lot better too. If you're really truly passionate and happy about it.
Truly.
So make sure that this isn't just something that you do just for the money part of it, which is wonderful and great, but you really got to enjoy it. It's got to be something that you look forward to, something that you can go to business every day and go through the grind that it takes as a trader to learn and develop your skill. This is not an easy thing. It takes a grind to power through, the learning and the skill development and all that type of stuff. But when you get there, oh boy, is it great.
Well, I think if it were easy, everybody would do it. And I stress that to people too. And also, if you're going to do this as a business, don't try and be the jack of all trades. You're not going to be the jack of all trades. You pick your business, you get good at one thing. You're a restaurant, you specialize in a cuisine. You can't be the Cheesecake Factory. You can't have that extensive menu of everything. And sure, you expand your toolkit as you go, right? But you got to get good at one thing. And a lot of good traders I know, they just specialize in a couple of things, Ryan. I think that's a beautiful thing. In fact, I'd love to go over to this and talk about this a little bit on here as well. We're actually there's a webinars coming up 1 week today. And also following up next Tuesday as well, that I know you're going to be involved in with Dan Bustamante and also myself, and we've got some other great guests lined up to come on the show as well. If you go to the stockability.com homepage, stockability.com on here, and scroll right down to the bottom, you will see right down at the bottom here our complimentary webinars. We're doing 2 of these guys for everybody here, and you just talked about business. We called it on here the crash-proof business, okay? Or the crisis-proof business, should I say. One of the things I've always loved about the markets is this truly is a business, if you do it the right way, that can be done in any environment, whether it's boom, bust, flatlining as well. Going through some of those ideas of preparing for these really the tactics you need just for today, the way the markets are at the moment, are very different to the tactics you would have needed in the summer, right, as well. What are some of the things that you're looking to do on this webinar, Ryan, that you're going to be talking about on the crisis-proof business?
Really, as it says there, talking about, number one, what is a crisis, as it relates to in the investment and trading world. So we'll talk about that. And really the other part of this is very important, is how to defend yourself against that. How do we defend our assets, our trading, against these crisis-type moments? So that'd be, remember, risk management number one. So how do we defend against those things? But then number two is, okay, now that we know how to defend ourselves against this, can we take advantage of that? Can we make money on that?
Yeah.
And so that's what we want to talk about too, is how can we find opportunities in those crisis-type moments? And there's been many, many, many crises over the year.
Yeah.
The first one that comes to mind here is all the way back to Tulip Mania.
Right, the tulip bulb crisis, right? Yeah.
There's, the starting point, and then, there's been, I don't know how many thousands after that, all the way up to...
They never stop, do they? Well, we got that coming on. I'm really looking forward to that. We've got 2 of these coming up. One week from today, Tuesday, 31st of January, and that's going to be at 7 p.m. Eastern. And we've got another one on Tuesday, the 26th of January at 12 p.m. Eastern, 5 p.m. UK time, GMT. We put both on there. It will be the same content, but obviously give people an opportunity to come live, ask questions, and get involved with our instructors on there. They are complimentary. We'll show you what they're all about, what Stockability is all about, and some of the things that we get up to when doing this as well. Thanks for sharing about that, Ryan. Now, on this subject as well, the show wouldn't be the show if we didn't have your call and my put. What do you got for me, Ryan? Because we've run a long show today. This has been so much fun. What do you got for me? You bullish, you bearish? What are we up to?
I'm going bearish this week. I'm going to go bearish on the euro.
Everyone's turning the table on me. Everyone's turning table on me lately. You're going to be bearish on the euro itself, are you? Did you say?
Euro British pound.
Euro British pound. Right, there we go. So EUR. Let's go GBP. Let's take a look. All right, what time frame do you want me on here then? Because I'm going to go...
Let's just go 240 or daily. Either one would be fine.
All right, let's go on the daily chart here. Always nice and easy for me to expand upon. There you go. So this is Euro GBP that we're seeing at right now. You getting into it now, or have you got something else lined up? What are you thinking?
I'm looking at right around the 0.9000000.
Right, so we're looking something kind of around this area. Let's just say around this area here, you'd like to be getting involved into it as well. So what we're looking for is a bit of a pullback on here for a continuation down at the moment. Been kind of rangy and choppy, don't you think, at this particular time, Brian?
It really has, and that is one of the concerns I have. Is like, well, maybe it's just going to go sideways, which like it has been here, and it very well may. But I am seeing some more weakness here, and I also really put a condition on this. it needs to break through just a touch lower the weekly levels. So I want it to clear those weekly support areas, on the left over there, and we're really close to that. So if it goes below that, absolutely, that'd be a great shorting opportunity there.
I do see
that's
it.
The only real condition I'm looking for is I want it to break below just a little bit lower, maybe get to about, let me see if I get a price in there for you. So if it breaks below 0.8856, right around there.
Yeah.
So I'd like to see it break below there.
Yeah.
And then short that retracement up into there.
I tell you, Ryan, I look at this chart and I see up on this monthly chart right up here at the top left of your screen, I'm just zooming in, a lot of selling pressure coming in there, real rejection at those highs, top end of a range. And, it's funny, looking at the daily chart straight away, I was like, yeah, you know what, it's kind of not the time to sell. But now you look at the bigger time frames, you can start to see where that bearishness and selling pressure is coming from as well.
Absolutely. So it's got a lot of room to run.
And I'm bullish on the pound as well as we speak as well. I've been a little bit more bullish on the pound as of late, looking at the pound, the British pound as well. So looking at that, talking about that, Push Dylan, good to see you on the show, my friend. It's been many, many years. I hope you're still in the UK and staying safe, my friend, as well. Love seeing this. Mohammed in Dubai as well. Hub, welcome to the show as well. Great to see you guys here. So I guess that means I got to be bullish, right? Well, this is easy for me. I've been kind of touting this one for quite a long time. Mohammed will know this because he was in my live trading room with me yesterday morning tonight. I am bullish still on crude oil. I gotta say, I'm still there. I am still bullish on this. To me, this market's still got upside to go. I cannot help but eyeball up here at around $55, $60. Even exploring, if I was going to kind of go into this, and let's just say go zoom in a little bit more on this weekly chart so you can see it. I tell you now, we definitely have some resistance at the moment on here. But I can see it. There's unfilled gaps high up here, to get through. To me, $60. I mean, I'm extending it out there. $55, $60. I know we're not that far off right now, but I've been calling $55 on this thing for absolutely weeks. To me, when that thing bottomed out, I was just like almost, it's probably going back about 9 months ago now, Ryan, as well. And you can see how price was at $6.50. $6.50. Can you believe it down here? Here we are right now. I mean, the world's just still going to need oil. And I know there's a big thing on renewable energy right now. All of those stocks going through the roof. But the tell for me is the fact that crude oil has still been moving as well. That tells me that's very speculatory, all of this move in the renewable energy sector. People are still looking to bolster those portfolios with crude oil as well. What are your thoughts on crude oil before we go, Ryan?
I definitely see that resistance area up there. So I think there'll probably be a little short-term pullback, but overall still bullish as well. So I'd agree with you on that. And the other thing, too, all the renewable energies, that's going to take quite some time.
Yeah, it's not happening overnight.
I mean, it's been going on for a while, but crude oil is going to be around for a very, very long time. Several generations still to come. I mean, it's not just oil to fuel cars and the refinement for gasoline, stuff like that. They use oil for all types of things.
Yeah.
Plastics and you name it. So it's not going away anytime soon.
Absolutely. Mohammed just saying live on here, as the lockdown unwinds, demand for crude oil will likely go up. I couldn't agree more. Would I be buying it right now? Absolutely not. Actually, in our trade room yesterday, we were short for a little bit, but only real short term, playing both sides of the market. If that thing can give me a pullback, I want to establish itself, but I really like it if it can pull back to around the $47 mark. I've been trying to get a decent pullback on it. We will see. But nevertheless, there are other opportunities on that as well. Do really particularly like that. Crude oil is definitely on the list on there. Ryan, wow, this is probably the longest show I've ever had on Take Stock Live. Amazing content, some real fantastic little nuggets on there as well. How's the rest of your week planning out for you?
Good. Just busy. I'm teaching a guided trade session on Friday morning, so we'll be trading the live markets. So
nice.
We'll be preparing for that and have some fun with it.
And I hear also you're also working with some new instructors as well in your team as well, trying to get those.
Yeah, we've hired on a couple new instructors, so I'll be training them starting next Monday.
Awesome. Well, God, I always hear nothing but good things as well. Absolute blast. I think now you have to be Daniel is my Buster Bitcoin. Ryan, you have to be my top 5 maestro. I absolutely love it. It's been absolutely great having you. Enjoy the rest of your week. Much love to the family. I'll see you again next week. I know you were saying you might try and get on the show with me next week as well, so we'll try and make that happen. Thank you so much. It's been a pleasure. Ladies and gentlemen, that was Mr. Ryan Watkins on the show as well. What a blast going through our top 5 performance enhancers. Absolutely love that show. A long show, but you know what? You know it's good when you're having fun and the time goes quickly. And man, the time did go quickly. If you are just joining us and tuning in, this has been Take Stock Live. This has been recorded and it is broadcast live on Facebook. New technology, so it looks like the technology held as well, which I'm super happy about. However, if you weren't able to look at this live, you can go and look at the recording on our Facebook Live page, or this will be uploaded shortly to our Stockability YouTube channel. Remember, Take Stock Live is powered to you by Stockability.com. And if you're interested in finding out more about Stockability and what we do up to in Stockability on here, go over to our website on here, Stockability.com. And if you scroll down to the bottom of the home page on there, right at the bottom there, and you will see the complimentary webinar, The Crisis Proof Business. Feel free to register for that. We'd love to see you there. Thursday, 21st of January, 7 p.m. or Tuesday, 26th of January, 12 p.m. That is both Eastern time. We've managed to make it accessible for anybody who wants to join us as well. Well, this time next week, we should have a new president all sworn in and fingers crossed everything goes safe and everything's happy with that. I really do hope so as well. So my thoughts are going to be going to everybody there as well. Guys, all I can say is this right now. It's been an absolute blast on the show. Stay warm if you're here on the East Coast. Stay safe. Locking down, but making the best of it. Enjoy this time with the family and also stay, more importantly, safe in the markets as well. Guys, I've been Sam Evans. This has been Take Stock Live. We will see you this time next week, 12 noon Eastern, here live on Facebook. Have a great rest of your week. Thank you so much.